Eric Muathe, Muathe.com, with a quick video on why traders use breakouts and breakdowns to enter and manage a trade. For example, we can see a good example where we get a nice swing trade after we clear the previous daily closing highs. From a swing trade perspective, you get a chance to ride the instrument higher. Now notice here, I should add what happens when you come and break below that previous entry level. We can see here as a good visual example, it tends to suggest that we've run out of momentum and we're about to drift lower. Again, we can see example here of a breakdown situation here. If you consider the previous daily closing low somewhere there. Now notice is we break below that level here, and then this turns into resistance. It comes and tests that level again, it is rejected, comes and tries to move above that level, it is rejected. So let's say you had taken that position and used the same area as a stop. It can give you some guidance as to where energies are, hinging towards based on the fact that we failed to recapture that level. So let's say you can still continue holding on a position. Now we can see a similar breakdown here, this time a little bit different, with the fact that we move below the recent daily closing low here, and once we break through that, really we never come back to that level. So that's a good visual as to why traders like to use price breakouts or price breakdowns. Now here we can see something that we should always remember is, so we see this break based on the recent daily closing lows, we break down right there. But notice after a couple of days, we do eventually recapture that level. So recapturing that level means it's time to get out of that position from a short perspective. And then notice how that same area becomes support here, and support here over a period of multiple days. And ultimately, you can see the instrument moves higher on the way to trading as high as here. There's another breakout here, successful breakout at that, and that breakout is based on the prior daily closing high right here. We see another breakout here, again giving you a good visual why playing breakouts for momentum makes more sense, because once you clear that level, you get a chance to ride the instrument as long as it is holding above your breakout buy point for a nice swing trade higher. Now again, we see a good example here where we have a daily closing high, and then we have a breakout. You can't see it, but it's right there. You close above the previous daily closing highs, but guess what? You immediately reverse, and that reversal, that movement back below the buy point was a sell signal. If you had understood that, we can see on hindsight, you would have avoided the majority of this drop. So a quick look as why we play breakouts for momentum and breakdowns for momentum, as long as they are successful when they break out or when they break down, depending on which way of the trade you are positioned. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C.